Yo, what's going on, folks? What in the hell is going on? A little bit better than yesterday, eh? A little bit of grain. Both of our beloved GME slash AMC up a little bit on the day. A little bit flat ass as usual in after hours trading. What the hell do we got going here? We got an SEC handing out a damn fine. The Gamestop wallet for Loopring, Poop Ring as I call it, because I bought a bunch of those turds at about $1.60. And I believe last time I looked, it's sitting at about 40 cents, 39 cents, of course. Right. And then we got a doozy at the end. We have the CEO of Virtu Financial talking about PFOF, and his words were a little bit surprising. And a gosh dang article, believe it or not. The headline is great, from the Motley Frickin' Fool, the shill of all shill bots, crap talking, fake ass company, the Motley Turd. We'll touch on that article as well. So there's your map of heat of maps for today. A little bit green. That whole thing was something was green down here yesterday. Besides the point, a little bit better today, obviously, right? In case you've been living under a rock today or yesterday, depending on when you're tuning in, 1192. A little bit down in after hours on AMC. GME 126.17. Down a teeny bit in after hours for plus 6.7% and 3.83% on AM Sizzle. Here's the old SEC. I love turning into these gosh dang whistleblower programs slash fines slash SEC website, one of my favorites here. The Securities and Exchange Commission today announced that investment advisory firm Weiss Asset Management LP has agreed to pay approximately $6.9 million to settle charges that it was violated the federal securities laws when it was unlawfully purchased stocks in 7 public offerings after selling short those same stocks. The SEC's orders finds that on 7 occasions between December 2020 and February of 2021. On the very bottom here, Weiss Asset Management has agreed to disgorge profits of $6.5 million and pay interest of $190,000 and a whopping penalty, folks. You ready for this? Of 200 measly grand, without admitting or denying the findings in the SEC's order. Weiss Asset Management has agreed to cease and desist from violating Rule 105 in the future. Yeah, of course they have. Of course they have, folks. So a little bit of a fine action there. 6.9 million of that is going back from the money that they took on profits, with a whopping $200,000 fine and 190 racks in interest. Great. Here's the old, this one here by Forbes. GameStop and AMC shares fluctuate amongst volatile market with an impending short squeeze predicted. Now, looks great, right? We got back-to-back of these articles. This just basically gives you a rundown of what this stock is doing. If you want to read the turd, I'll pop it in there. The reason I'm bringing it up is between this turd and this turd, okay? The second one's even better. Now, let me ask you this real quick, you guys, before I go on. Have we become so lazy that we have to listen to an article now? Really? We can't just read. First of all, our beloved newspapers. I miss reading the newspaper. Those are long gone. I mean, they're still here. They're the size of a sheet of paper anymore. But we got to listen to articles now. Jesus. So this thing just talks about last year, blah, blah, blahs. It doesn't really say much on why a impending short squeeze is predicted. Okay? And then on to this one. This might be the greatest Motley Fool article of all time. As most of you know, if you do not know, this is the biggest shill website ever. Okay? It's finally time for serious investors to consider buying AMC stock, right? Looks great. And then you look at this, as we know, to your naked eye, they don't know what Motley Fool is, but we know. And then you look at this, you're like, oh, okay, shit, what do we got here? Now, this just talks about the basics of the stock, blah, blah, blahs, blah, blah, blahs. You don't need to know much there. Screen test, blah, blah, blahs. Adam Aron's tweet recently, get down to here. Up here they're talking about not indie movies and a little shaky box office, and then they kind of say okay, good on Top Gun Maverick and the Jurassic World, but then here at the bottom you always got to throw in the old take a jab at AMC, right? Right now, it may not seem likely enough. Admissions for the industry are down nearly 30% so far for the quarter compared to the second quarter of 2019. 2019, folks. Remember that year? Yeah, COVID. Hello? Before COVID. After the past 3 robust weekends, years to date is still down 37% when stacked up against 2019 and 41% below at this point in 2018. Okay, these Motley Fool knows exactly what's been going on with these stocks, yet they put together articles where the headline reads this: oh shit, should I buy some AMC stock? Let's click on this, and then let's read through some turds, and then you get down to here where, oh no, it's kind of crappy. Analysts don't see the chain turning a profit until at least 2026, and the bearish arguments is that AMC's liquidity cannot last long. Okay, then it goes through down here. Should you buy $1,000 in AMC? And then wants you to click on these 10 best stops. Keep reading their shitty articles, right? So, again, you guys, it's been a solid 14 months where I have pulled up. Remember, we used to have the turd of the days. I'd pull up all these turd articles. Some things never change, folks. Although the headlines look halfway decent. I looked at this, I go, okay, God, I gotta read this one. Nothing. Why you should buy it right here. Then you spend time reading this if you're an average Joe and you're not buying the stock. We know the game. We know the damn game. The wallet, Loopring / GME wallet right here, if you guys want to, if you haven't seen this, this was blasted out today, but all sorts of stuff. How to use the wallet, table of contents, guide, blah, blah, blah. You get the picture, how to create your wallet, blah, blah, blah. I'll pop that in there if you guys haven't seen that, if you want to hook that up for the old GME. Well, it's a mile long. That's probably pretty well put together there for even dummies like myself. So that is that. Ortex, as we know, some shares will return today. Short interest update. We are aware of the number of stocks, including AMC, GME, MMAT, have shown large returns of shares today. We continually perform due diligence, particularly on large moves. GME estimated short interest has fallen from 22% of free float to 16%, a net decrease of 4 million shares. AMC had some other, I think they tweeted it out. I see Ortex. Either way, it's in there. Some returned shares. Look at this, Zero Hedge. Hedge funds just sold stocks at the fastest pace on record, surpassing even Lehman liquidation spree. Look at these years here. April of 2008, 2016-ish, 15 I mean, and then now. Yeah, hello Christmas. Last but not least, this is a dandy. I watched this damn thing twice. Let's go through this together here. Remember, this is the CEO of Virtu Financial. I'm going to stop this in between here so we can kind of break this down here a little bit. And kind of shocked on what he said, actually.
CEO of Virtu Financial, and he's with our very own Bob Pisani. Bob?
Hello, Kelly. So Chair Gensler has just given a major speech here at the Piper Sandler Exchange Conference. And Doug, he's not happy about payment for order flow. Now, this is...
You guys, he's got a little cowlick foreman back here. Somebody get him some Aquanet and a little water, get that thing down.
This is the process whereby brokers send their orders to market makers like you, Virtu. He says it's riddled with conflicts of interest. He's not happy about the fact that he says there's only a few market makers that are really doing this. He wants more competition out there. Is the average retail trader being disadvantaged here?
I mean, fundamentally, the answer is no. And I think payment for order flow is something that's been around for 20 to 30 years. And it really has fostered innovation and competition within the marketplace. And I should say that within the marketplace, we have roughly 250 broker-dealer wealth management clients that send us retail orders. 95% of them don't take a rebate or payment for order flow. So again, the chair, with all due respect, is conflating the issue of payment for order flow with the ecosystem that has evolved in this country for retail trading, which has really enabled retail investors to have instantaneous execution at essentially zero commission on 8,000 listed names. The cliche that markets have never been better is actually factually correct.
I have been covering the markets for 32 years at CNBC, and my impression is the retail investor has never had it better. But what's wrong with more competition? I mean, this is what Gensler is talking about. So, for example, he's floated this proposal about let's do auctions for the retail people, that there's too much power concentrated in your hands, Virtu's hands, Citadel Securities, two of the main market makers out there. Is there a problem with having auctions?
No, look, we fundamentally at Virtu, and every market participant says we welcome competition. We're not anti-lit exchanges. And today, indeed, broker-dealers, retail broker-dealers, are free to send their orders to exchanges, to ATSs or dark pools, or to wholesalers. There's no obligation for them to send it to Virtu or Citadel. We provide a service. We provide guaranteed execution. We provide meaningful price improvement, $12 billion last year in meaningful price improvement. So we welcome competition from lit exchanges. We've put in proposals to say that lit exchanges should be put on a more fair, level playing field with wholesalers. We welcome that because, Bob, we're not internalizing all these orders. It costs us tens and tens of millions, hundreds of millions of dollars to source price improved liquidity on exchanges and provide that back to our clients.
One of the things that you've said for years is you do provide price improvement. Yep. You do actually help improve. You get a better price for it. Can you explain briefly how you do that? Because Chair Gensler has been very skeptical about that.
Well, I'm not sure he's been so skeptical about it. I think some of the data, and he spoke about it today, the need for reform of Rule 605. So essentially, the rule is antiquated. It doesn't really cover the amount of what we call size improvement. And we've been very upfront and very transparent about providing that level of data. So what that means is, in the 8,000 names, to the extent there's not liquidity on a lit exchange, fundamentally the wholesalers are providing infinite liquidity at the NBBO or the inside price. So if we get an order for 1,000 shares in Reg NMS stock that no one's ever heard of, and there's 200 shares on NASDAQ in New York, we fill out 1,000 shares at that inside price. That's meaningful liquidity. 55% of the orders that we received, Bob, we provide size improvement. In a complete, as he calls it, an auction environment, who's going to provide that? The liquidity fairy? I mean, it just doesn't exist.
This is a very complicated proposal. There's not really a rules that's being proposed. Chair Gensler is floating this idea, and the implication is maybe in a few months we'll make a rule proposal. Do you think anything is going to happen here? Do you think there's actually going to be a rule proposed, or are we just going to try to get more transparency, more information? Gensler may have to settle for you providing more information on exactly how much it costs for payment for order flow.
We're all about that. I mean, whatever the rule is in terms of providing transparency around how much payment for order flow, price improvement, set it at the midpoint, we're all ears. We've made those proposals. It's a little bit like punching a ghost right now, right? Because they have these high-level statements that aren't really backed by any data, right? We've provided real data about what we do. We welcome the opportunity. We would welcome a roundtable. I don't know why the chair is not willing to engage the industry directly on this. I'd be happy to come with him on this program.
Wait a minute. You're saying he hasn't talked to you? You're one of the biggest market makers in the United States. Are you saying he hasn't talked to you?
I have spoken to the chair. I would like some more time with him, and I think him coming to the industry and coming to Virtu and understanding what we do and how competitive the marketplace is. He talks about 2 or 3 wholesalers. There's about 10 of us now. UBS is involved. Jane Street, Jump Trading, Hudson River Trading, Susquehanna, Two Sigma. Anybody else can enter this marketplace. There's not a barrier to entry. There's not like an admission ticket that you need, right? It's a competitive marketplace. Every day we're banging heads with Citadel Securities to provide the best service and the best price to 250 clients. And some days we lose, and some days we win.
We'll see if this goes anywhere, but Doug Seafood, CEO of Virtu, thanks very much for joining us. And Kelly, I think the key point here is when I started with CNBC in
BS. The bottom line in there is Virtu and Citadel get the majority of this. They're the big monsters in this. It doesn't matter. You can bring in the little guys, and they're going to take little tiny nuggets, just like they do today, just like they'll do if he welcomes everybody in. Not going to happen, and he knows that. And there's a reason why he's the CEO of Virtu, right? Good dancing, sir. Okay, guys, we got Wednesday here today, or maybe the market's already going as you're watching since it's so late here on Tuesday. That's a wrap. Let's pop in this damn, you guys don't need to read those old rats there. Pop in this damn GME wallet here over on Loopring. That's it. Peace, guys, gals, everyone. See you tomorrow.